Hello and welcome to this week's market update. My name is Alejandro Zambrano and I'll be trading the market since 2006, and I will be sharing some input on where I think markets are heading this week. Before we start though, as always, I need to stress that trading financial markets unfortunately is high risk, so we may lose all of our invested money. As well, I'm going to share my point of view of the markets, but this does not make it trading advice. Make sure you do your own research. All right, so what happened last week and what can we maybe build on? All right, it's really important to understand what's driving the markets. Now, a lot of you guys are technical analysts. I'm also a technical analyst, but I'm also economist. I studied economics at university and been practicing economics for, well, since 2009, really, I would say. And we want to take the economics into account, because then when the price reaches a demand or a support area, we will feel more confident because other people will be thinking in the same way as we think. And the likelihood the price actually proceeds as we want it to would increase. And that's why it's important to understand what's happening. So I think there's two things here that we can learn from here. Like if we see the Swiss franc declining sharply, that would make perfect sense, and as well the euro. Let me explain why. So first things first. So last week, the Swiss, that would be the Switzerland National Bank, or the central bank, they actually cut rates with 50 basis points to 0.5%. That's the biggest cut in nearly 10 years. And the reason for cutting now is because inflation is low in Switzerland. It's only at 0.7%. So if they have an interest rates that is low, then that hopefully is going to get the Swiss to invest and spend money, and that should hopefully lift inflation. Because just during COVID and even before that, they always had very, very low inflation, which meant that they actually had to have negative interest rates. And when you have negative interest rates, it means that you get paid for leaving your money at the bank. Normally, when you want to, take that back. When you want to borrow money, they pay you, okay? So if you want to go and get a mortgage because you want to buy a house, you have to pay, right, to borrow the money. Here, they will pay you to borrow. Not much, but that's the reality. So if their idea is to cut aggressively now, so they don't have, because if they do little by little now, it's not going to trigger inflation. So that's why they're doing this. Now, this is both good and bad. I don't want to get it too complicated here because we're not a macro, we're not going to spend too much on macro, but overall, I would say be bearish to Swiss franc. And the European Central Bank as well, they cut rates by 25 basis points to 3.1%. But inflation is at 2.3 as well. The bank said that the way wage growth is going in Europe, inflated, which, as I already just said, in the euro of 242k. It's a little bit as bad as it was when everybody was worried that the labor market and the NFP would go negative, which was not too long time ago, was this summer. Remember with the hurricanes and everything? Around that time, people were very worried about the US labor market, and this reading, which is just a 1 week reading, we saw like flashbacks to that, so very bad numbers. This is not great, of course, because inflation is really high. It's at 2.7%. US inflation did meet the expectations. It's about 2.7. Now, bullish dollar Swiss franc and Poly at 4.52%, which was still lower than the 45.3 anticipated, and same from 49.5 to 51.4. In the UK, this data, let me see, should be out as well. Let me just refresh here. We have Canadian numbers, and that is anticipated to show 0% growth. Remember, the Canadian Central Bank cut rates very bad numbers here could potentially cause the Canadian dollar to weaken more. Retail sales, that. And then big number for the GBP USD would be the inflation figures on Wednesday. And then we have the big mover of the week, which is the Fed rate meeting. Now, really, we know gold, all the Forex markets, very sensitive. Stock markets and crypto as well are sensitive. But we are heading into what we call the Santa Claus rally. So usually November, December, January, February, March are like some solid months to be long crypto, solid months to be long stock markets in particular. That's what we've been talking about for a long time. And that is what's happening now. Like the Nasdaq 100 is pushing to the upside, the S&P 500 as well a little bit. So everything is sort of rather bullish. So people might shake it off. Okay, they might shake it off as well. Stock indices might shake it off because we have deregulation coming in on June 20th, and we also have tax cuts coming in early 2025. So with all that said, I think they can shake it off. But at one point, what will happen if rates remain at 4.5%? Well, inflation is at 2.7, as we know. So this is obviously not going to be good because the cost to borrow money is much higher than inflation, and it's also higher than GDP growth, which is sort of at 2.9% or so. So this would eventually choke the economy and slow it down. And that would definitely weaken gold and at one point stock indices and even crypto. Thursday, this is one of the tricky ones. So up until recently, everybody thought that Japan would raise interest rates on this month, and for now, people don't think they're going to do no changes, but we're still going to pay attention to this. Bank of Japan is one of the few central banks that is going against the grain and actually hiking interest rates because their inflation is too high compared to what they're liking. And the wage growth as well has been relatively high. Now, the biggest problem here from a trading perspective is that there's no data. So there's no specific time when it's going to be shared. So we need to be attentive. And then we have Bank of England. I don't think it's going to be a big mover. Overall, again, employment rate is at sort of low levels in England and Great Britain, and inflation is sort of okay. So people don't think they're gonna do too much. We'll know more on Wednesday, what those numbers say. Potentially have something, but the general idea in general is for them just to cut. And then we have jobless claims. We pay attention to that as well. As I just mentioned to you guys, the numbers recently have been really poor. And then we have the Fed's favored inflation gauge, which is core PCE. Now, core PCE is anticipated to be 2.8% on an annual basis, up from, the last reading was at 2.8 annually from 2.6 in June. And again, inflation figures in the US are not, in normal cases, you wouldn't go out and cut rates at this situation. You would actually hold rates. But the reason why they want to cut rates is because they think, it takes about 9 months for this to feed into the economy. So they're not cutting rates this week, because what's happening today is because what they think is going to happen in a couple of months. So from a trading perspective, how can we manage this? Well, I would say in the very short term, as long as trade above 104.47, I think people are going to be buying, and they're going to try to lift this to maybe 106. 81 that's been trading for a while, this is an inverse head and shoulders to some extent, which is now morphing into a rectangle. What do we do with rectangles? It's very straightforward rectangles. Break, sell down, and then maybe buy here, trade to the upside. Now, in the long run, with everything going on in the world and with Trump gaining power, I would be very surprised if we're not at parity. So $1, €1 at one point. So I would prefer to sell. But from a technical point of view, this continues to be bullish. Here's the S&P 500, and the S&P 500 is in uptrend as well. And last week we said look to buy here for this to book profits here. Now, if something goes to take profit and spends 4 hours around these levels and it doesn't want to go higher, probably a good idea to book profits. So I would have booked profits here if I did buy this myself. and then we went back to the same buy level, and I will continue to be bullish, targeting the same levels as last week. If we would for some reason go back down to support again, to these levels here, I think people are going to be buying and targeting these levels up here. Gold prices. So gold prices have been stuck in a big triangle. It's not ideal. It's not good. There's not too much we can do about this. It's just, sideways price action. And the best thing is just to avoid it. Now, if you look at this bit here, we did breach here. So we had this in a little range, and we breached here, and we could have traded this to the upside if we wanted to. And we could have, it did go up, you see here. And then we even breached the trend line, but then we were actually forced back into this. Now, if you really wanted to, you can do another trend line like this, and another trend line like this. And what would you see? You see that once more, price is stuck in a range. So it's not ideal to trade. Now, this is morphing into possibly an ascending triangle, which is obviously amazing if that would happen. So break here could take you much higher at one point. For now, it's just a double top. Now, in the short term, I'm not sure we're going to break. We could potentially be trading sideways here for a while. And I would say I would be buying here, targeting the upside possibly. Bullish above 2,612. Break here, especially if the Fed is really aggressive, telling us they're going to pause, and you're looking at a push towards 5,230 or so, this low from November. Here are crude oil prices. So they've been stuck for quite a while, and we're breaking a descending triangle, but not on the horizontal line, on the trend line side. And we breached here, which we already did when I took this snapshot on Friday, and could potentially push towards 78.68. The biggest problem though is that trading this side of the ascending triangle is difficult, but maybe if we break above 74.19, I think people are going to be buying. I think just in general, as long as we trade above the lows here, I think we can probably slowly go upwards. And here are Bitcoin prices. So I took a snapshot here on Friday. At that time, I said a break to 102 could lift to the upside, went to about 106 or so. I would assume, we have gone lower since then, but if we revisit these levels, I think we're going to push to the upside. I think what's interesting to note here is that, it's really important to note this, is that, on this push, then everybody got super excited and went out and bought Bitcoin. So funding rates, which is the cost of buying on the crypto exchanges, soared. I think you're paying like 50-60% on an annualized basis to be long. So if you're paying 60% to be long something, then the asset there has to go up with 60% within 12 months, because otherwise you would be breaking even, right? So the more people are long, the fees goes up, and it just becomes more expensive to be long. So then at one point, people are going to be like, oh, it's not worthwhile, especially because they're trading with leverage, right? So, they open positions, and maybe they open with 20 times leverage or something. So, very quickly they'll see an impact on the high funding fees. But what's interesting though is that on this crash here and on this crash here, the funding rates were all reset. So people are buying, but they're buying on spot. They're not buying on leverage, which is great, which means that we could go upwards. So the funding fees are not limiting price growth right now. And it also lowers the probability of a massive slide, which is very encouraging. So with that in mind, again, I would be looking to be bullish on a dip here. And as for altcoins, some are pushing strongly upwards, but most of them are sort of struggling. It's a bit of a tricky situation, and I will be a bit cautious. But obviously, with Bitcoin going up, we do want to be maybe looking to buy some altcoins. I'm going to publish a setup actually on Litecoin, and that's going to be on the Think Markets TradingView page. Just go to TradingView, just search for Think Markets TradingView, and you'll find the page. When we finish this, the Litecoin update is going to be up there. And I think in that Litecoin setup could be an interesting setup where you're looking, I think it was maybe 10% upside or so. And there's a few other ideas as well. They're going to be published on tradingview.com. With that said, if you have any questions, just drop them in the chat right now. Otherwise, you can just drop them in the comments and I'll come back to you at a later stage. Also, next Monday and the Monday after that, I will be offline, and I will be offline for the holidays. So I'll be back on January. Let me see here if we have any questions. Usually not too many questions, but there's quite a few guys that watch the recording, which is amazing. So keep on watching it, keep on liking it. It's very important. If you like it, of course you want to support it, because if you like, and you know, even if it's like a thank you or something in the comments, then we know that you like it and we'll do more of it. But obviously, if not too many people watch it, we don't have any questions, then that's an indication that there's not a demand of this, and then maybe we'll try to do something different. All right, thank you so much. I'll see you on June 6th. Goodbye.